in those 2 points. The first one we talked about housing market. The next we talked about the Fed and rates. Essentially, they're related.
Yep.
The move the Fed has been making is cooling off the housing market. It's not sinking it. It's just cooling off the overheated market. So you're starting to see a little bit of cooling off. You're seeing sellers bring down their expectations of price. But once again, we're not seeing, it's not a bad market. We still have a very healthy economy. Home values are very, very stable. In fact, we actually have an article available that we found in the last couple of days on CNBC. There's a link that you can find. And it basically talks about 10 of the states in America that are the most stable. So even though we're going to see some cooling off and see prices correct a little bit, and a lot of these are the Sun Belt states. There's a lot of people in these states. This is your Texas, your South Carolina, your Tennessee, your Arizona, where we don't expect a lot of turmoil as affected from the cooling off.
Good to know.
Yeah.
Thank you for going over.
So second key is talking about inflation. So the Fed has been raising rates, trying to slow down the overheated economy. Oil and gas prices are starting to come down. A lot of people are seeing that out on the street, seeing that relief at the
Parades
pump.
in the
So you have a
street,
couple
sure.
of factors there. There really isn't more supply. You can't pull it out of the ground any faster. But we are seeing a little bit less demand. So as the Fed has tightened the economy down, ratcheted things down a little bit, they've slowed the demand a little bit. So that's going to bring prices down as demand wanes. So we're seeing that across the commodity complex. We're seeing that in some of the food, some of the commodities like wheat and corn and some of the foodstuffs and animals. And so it seems like it's working. So it's not fast enough, and obviously the economic indicators, the CPI that the Fed uses to gauge inflation is always a lagging number. So come on the 27th when we get the Fed meeting, that's based on the June and July data. So in August when we get the July data, we may not see a major shift. I'm just optimistic on the future based on the data we have that shows this subtle cooling off across multiple layers.
Again, Megan Withers, Steve Remington, thanks for tuning in. Woo!